Yes, you are listening to the Ready, Set, Retire radio podcast with Steve Anzoni. My name is Jessica Forkel. Get more details on the website at fairwayfinancial.net. Listen, we have all been glued to the TV. You can't escape the commercials, the things on your phone, the text messages, social media. And, you know, when you watch a presidential debate or even the vice presidential debate, the convention, whatever you want to watch there. And then, lo and behold, they do a little fact checking and you find out that there were some holes in some of their stories, some of their justifications, some lies, etc. Again, we're not playing a political show here. This isn't about red or blue. This is about each side trying to justify their means. But lo and behold, there's some, misunderstood information there, mis-talked about information. And it got me thinking about the financial world here because it's kind of the same deal, Steve. I mean, we talk about education and the process to give you guaranteed income and that solidified plan each and every single week. And then you got folks, with these bigger names down the street basically bashing everything that we're saying.
Yeah, it's kind of brutal. The misinformation that is allowed to be put out there. Social media, of course, is not helping, but it's a platform that everybody turns to try to get information. And, it feels like you're going down a rabbit hole, which is why after all these years in business, I still do my live events because I'm trying to get the right information in the hands of the people. I mean, that's what it's all about. It's about informing. I mean, I had a gentleman come in. He was listening to the show. He called. Really nice man. He's by himself. He's widowed. And we were just talking and looking over his accounts. And I noticed that in his bank, he had a decent sum of money in there. And his bank was only paying him 0.01. Today, they were paying him that. How pathetic was that? It's in a money market, too. And I looked at him and I said, hey, you need to go to your bank and you need to tell them that you need to earn around 4% on this money or you're leaving. So he looked at me and I said, yes, say it just like that. And he went down there and lo and behold, what a miracle, Jess. They happened to have a money market rate at 4%.
Oh, look at that. Yeah.
And they never told the guy, all right, this guy has got over $100,000 in there. So he's been losing basically 4% a year for the last, a year and a half or so that they pumped up, maybe 2 years. That's pathetic. I mean, that's like $8,000 or $9,000 that he lost.
Wow.
Because his bank was lazy. I'm not going to mention the bank's name, okay? But this is true in many industries, and it's kind of like your cable company. They're not going to tell you about all the new deals or anything like that. And, you've got to call and you've got to make the call. You've got to be proactive or you're not going to get it. It's really that simple, right? The squeaky wheel gets the grease, right? And if this gentleman never met me, never called me, he never would have pursued that. And he would have been losing around $5,000 a year on his safe money. And this was a gentleman who wasn't really in a financial position to give up $5,000 a year. But the bank didn't care because what do they care? I mean, they were able to make more money on it. And they told him, oh, yeah, it's an old account, and we'll give you a new one. Wow, isn't that nice of them to do that? We're supposed to do what's in the best interest for the customers. That's our job, all right, period. And we're supposed to look out for them, whether it's the money that I have in my hand or other monies that they have. We want to do the best job we can for people. And so I was just able to see that on his statement. I mean, my God, it was so small in the top right corner what he was earning. And I told him about that, and he picked up $5,000 just for coming in. Now, I'm not saying that everyone walking in here is going to benefit from that, but the facts remain that I've been at this a long, long time, and I kind of know what to look for, on statements. And sometimes I can find things like this and help people make some additional money without really doing anything other than just upping the account to a higher rate of return in this case. So all of us out there just need to be proactive and try to cut through the minutia that's out there. I mean, fortunately, the political minutia ends November 5th, we hope, and we can get on with our lives. But the financial minutia is going to continue to be there forever. It's not going to change. And it's up to me and you listening to figure out what is available to you and get the facts, not the stories from firms that perhaps don't do full planning or only have specific products. Understand how these things work and how they can benefit you and help you create a cash flow long term, right? I mean, look, we're all looking to retire someday. And the idea is retirement should not be as complicated as it appears. It's really all about replacing your paycheck. That's what it's all about. And some people lose focus of that, Jess. They tend to, I don't know, they just look at their statements and they get enamored by the circles and the graphs. And in the end, that's not what it's about. It's about how much can those circles and graphs pay you and how long can that money last. That's what it's about. That's how you can retire with greater financial confidence. And so that's why I created the buckets, the ones you love,
Absolutely.
And I talk about at the workshops and in my book. I created that so I could have a picture because I think pictures tell a really good story. And if you come to one of my live events, we just had one this week. It was phenomenal. We talked a lot about the buckets. We used the visualization charts and we showed people, look, this is how you should think about your money. You should think of it as an income, an inflation hedge, an emergency account, and a fun bucket. That's right, a bucket that you're supposed to spend in retirement. And people tend to freak out about that, Jess, because everyone's biggest concern, as you know, is running out of money.
Absolutely.
And so if they don't have the proper plan in place, then yeah, they could run out of money. And my job is to educate them and to explain that there are options that will allow them to have a check similar to if they have a pension plan, right? A check like that will last them their lifetime. And if they're married, their spouse, right? So that's something that, unfortunately, 401ks, although they can offer them these days, they don't. And I don't see any of these 401ks being proactive in offering those type of products. So that's the messaging this morning is pay attention, try to sift through what's out there and figure out where you're getting the info from. Is that person been in the business for a very long time? Do they have that clout? Do they have that knowledge? And that's who you want to talk to. It's kind of like having a good coach. You have a really good coach, it's going to help your chances of succeeding. And it's the same here in the financial world. You have a good coach, someone that you can trust and work with, then it's going to help you in your journey become a little bit smoother. So if this sounds like you and you're in this situation and you've been thinking about this for a while and you've been listening to the show for a while, it's time to take some action and pick up that phone and give us a call at 508-552-3230. That's 508-552-3230. Or you could jump on the website at fairwayfinancial.net and take a look at who we are and what we do, and you'll see my schedule right there online, and you can book an appointment like that, and we could talk on the phone first. So whatever you're comfortable with, I'm happy to do. And oh, by the way, I stay at night because I know some of you out there are working, and you work till 4:30 or 5. I have no problem on a couple nights a week staying in the office late and seeing you after work, too. I've done that for a few couples, and they've really appreciated it. So I don't have a problem doing it. So there you go. We're here for you. Just give us a call.
Yeah, no, exactly. This is something that is crucial to sit down and have a conversation with. And Steve makes it easy. Again, we're offering really anything you can think of. If a phone call works better for you, Steve will stay late. He'll come in early, whatever works for you. Again, come in and let's call this, we talked about with the election, so let's talk about the uncertainties. Let's call it the election protection plan. If you kind of are trying to hedge your bets on who's in the White House or who to believe, and you're doing the same thing with your finances. Who do I believe? Where do I go? How do I make sure that, I'm going to be able to replace that paycheck in retirement?
People think, it depends on who gets office, what's going to happen here, what's going to happen there. And we've got the facts and the numbers over the years that it's really 50-50. You remember the numbers we talked about on a couple of shows ago? It really, what you need to focus on is not so much who's in office, but where your money is and what the goals and objectives are. What are you trying to do? And get on it. Don't sit and wait and wait and wait. Get some facts, get some things put together for yourselves. That's what we're trying to say here is we can't control who's going to be in office. It's not going to happen. I mean, yes, everyone has a vote, and that's great. But in the end, we don't control who's going to be ultimately chosen here. All right, there's millions and millions of votes, and that's just how it is and how it works. And so you got to be more proactive about where your money is, how it's working, what the expenses are, what the risks are. Does it provide you with a guaranteed income in retirement? That's what you got to focus on.
Time to start thinking about some end-of-year financial chores. I know it's hard, right? We're thinking about the holidays, getting the recipes ready, making plans, but you can't forget about your financial to-do list here. And we talk about chores. I'm talking about calculating required minimum distributions. You may have heard them also known as RMDs from your retirement accounts. And Morningstar's Christine Benz says one misconception is that you have to take an RMD from each account. She says that's not really true.
Be strategic about where you go for your RMDs. As long as you take the right amount from the accounts that are subject to RMDs, it doesn't matter where you go for them. So you could go to all one account. You could go to all one holding within one account. So a great example would be for investors right now. Their U.S. equity holdings have had a tremendous run. Consider peeling back just from those U.S. equity holdings, leave the other stuff intact. You can really actually improve your portfolio along the way with taking your RMDs.
Okay. Well, it really sounds like this kind of conversation can get complicated in the weeds, Steve. So I want you to make it easy for us to understand. How do you help with this process?
Yeah, I mean, it can. And the more IRAs you have, obviously, the more complicated it is. So first thing that I try to suggest is to consolidate. If you've had some rollovers over the years of different jobs and you have all these various IRAs, you may want to consolidate them to 2, maybe 3 IRAs, all right? Try not to make it more complicated than what it is. So what she's saying is 100% accurate. The IRS doesn't care where you get the money from. They just want to make sure you get it all the right amount. So if you're going to do, take it from one, then you have to add up all your IRA numbers, okay? So it's a little more tricky. So you take all the amounts at the end of the year. So they use the 12/31 calendar, okay, to determine the amount for the next year. And then you got to apply the factor for how much you have to take out. So it can be a process because if you do it wrong, you might get penalized very large. But if you have someone like myself, for example, who can help you doing this, it could, like she said, help balance your portfolio better by taking some of the gains off the table and allowing the portfolio to almost rebalance doing it that way. So it is kind of interesting that you do have that option. Many people don't take that. They just do the default because it's easier to take the minimum from each because at least you're doing it correctly. But it may not be in your best interest. So, for example, if you've got a really conservative IRA, like say you have one in the bank at 3% or whatever, and then you've got another IRA somewhere else that you happen to lock in a higher rate at 5%, well, you probably don't want to mess with that one. You want to take from the least earning account on the fixed side, and on the investment side, like she suggested, if you've done well with some stocks, it might make sense to take some of that gain off the table, as she put it. But either way, you're going to need someone, either your CPA or someone like myself who can take all the numbers for the end of the year and run the calculation for you. So it is a neat option. You just got to be careful with it and have a professional to work with to help you do it the right way. So that would be my suggestion. So that's the way you'd want to do it. And we're here to help you if you want to find out how that works, okay? So 508-552-3230. Mm-hmm. We can help you with that. And obviously we can help you with that. I love that. Would you say election protection plan?
Protection plan.
That is good. I love that. So we can help you with that too, just to see where are you at right now, okay? So what's your score in the expense scale and on the risk scale and on all these other scales? What's your income check? Do you know how much income you're going to be guaranteed to get at retirement? Do you know that answer? I bet you most of you don't. Would it be nice to find out before you retire?
Steve, there was a recent study done by Mass Mutual that found the average retirement age this year is 62, which shocked me. I mean, that seems really, really, young. Well,
yeah.
Not everyone could pull that off. So I found an article I read at gobankingrates.com. They say, well, there's certain signs that can tell you if you're lucky enough to be able to retire at that age. They say you've got to have 2 or more income streams, right? And you got to live, on 4% of your investments. Okay.
Right.
Number
Makes
3,
sense.
you have enough to support you for 20 or more years. And, of course, number 4, really the golden nugget here, you don't have any debt. So
that's the big one.
That is huge, especially in today's world. We all know credit card debt's gone crazy with inflation, et cetera. But, it also recommends a long-term plan, which, I think we all need that. The long-term plan, identify the risk, the unexpected. But, bottom line, have you helped people retire as early as 62 that have had all these items?
Not often, but, yeah, I have helped a few. The real key of all that stuff there is no debt. And I think it's interesting they say you have enough to support you for 20 or more years. It better be more years because at 62, you're expected to live till like 85, 87. And some of these kind of concern me a little bit because it's all guesstimations. It says you can live on 4% of your investments. Are they including inflation in that number? Is it going to be 4% plus inflation, right? So there's a lot of factors that are really difficult to look into. And if you're 62, when they say retired, are you retiring from your full-time job? Are you still working part-time, right? Because I have a lot of clients who do that, and they enjoy getting out and doing some stuff part-time, as they call it, a little spending money. But it is ambitious, and hey, if you can do it, God bless you. And if you're able to have the means to do it, the schedule, I guess, because you got to fill in. You think about it, right? You work for, like 40 years for your life. And, you're doing the same routine. You're getting up early, going to work, coming back home, same deal. And now all of a sudden that stops. You better have a game plan to fill those gaps in because you're going to be sitting there some days going, what am I doing? I'm bored out of my mind. I need to do something, right? So it's not just the financial end, Jess, that I see when I talk to people. It's what are you going to do with your time? I have a client. He's this guy. This guy could fish 24/7. Okay, not be bored. Like that's what he lives for. So when he retired, he was so excited to be able to get out and do his thing. He's loving life. Everything's great because he has a awesome hobby that he's been into his whole life, and now he can treat it almost like his job. And he's doing fantastic. So, look, it'd be nice if we can do that. And the big number, like I say, there is no debt. If you can eliminate the mortgage, eliminate the credit cards, you're going to be so far ahead of the game, even if you don't have millions of dollars, right, in your 401k. You can have less money with no debt, and depending on your lifestyle, make it happen. So that's why everyone is different. And that's why you got to come in and have this chat. Can I do this? I'd like to do this, but can I? Is it feasible? Does it make sense? Am I prepared in other areas other than financial to do this? And that's what you got to ask. And, long-term care still might come into play too because of health concerns. And you need to address that, whether you buy a formal policy or whether you just have a game plan for it. That's important as well. It's not just the financial. It's all these other factors that I discuss when you come into the office that you'll find very refreshing and very different approach, and not just money, 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 but lifestyle. And I can help you with that if you give us a buzz at 508-552-3230. Or, again, you can just visit the website at fairwayfinancial.net. And check us out, look us up. And, we've been around a long time. We've helped lots and lots of people to retire successfully. and would love to be able to be part of your team to help you get to where you need to be.
Get more details on the website, fairwayfinancial.net. That's fairwayfinancial.net.
Steve Anzoni is a licensed insurance provider by the Division of Insurance and is not registered as an investment advisor. Insurance and annuities offered through Steve Anzoni, Massachusetts Insurance License 3851053. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Steve Anzoni is not licensed in all 50 states. To find out if Steve Anzoni is licensed in your state, please call 508-398-3337.